Welcome back to Fair Fate Investing. In today's video, we're taking a look at one of the 10,000 stock screener list results that I found, and that stock is Yiren Digital. In screening through that many stocks, you're bound to find some things that are going to be very cheap or very interesting situations, and this happened to be one of them, so I'm sharing it with you guys today. So Yiren Digital has a $389 million market cap. It is an AI-powered platform focusing in financial services. So they claim to use AI to power their financial services for customers in China. Generally, I don't want to be exposing myself to Chinese AI companies because there is some risk of them being fraudulent. But nonetheless, I just want to show you guys the financials. The margins versus the industry are very strong, and they net 40.46. So every dollar that they touch, they net 40 cents of it. Management also very strong. We can see that the price to earnings ratio is 1.34 versus history. This is on the very low end. And basically that means that they trade for 1.3 times what they earn. So that's one of the lower price to earnings you're ever going to find. Sure, they can get lower, but that's very surprising to see a company like that. We can see that revenue spiked here in 2017, and then it's sort of fallen back down to what I would call slope, but generally it is up and to the right. And zooming in on a trailing 12-month basis, we can see those margins are increasing alongside the revenues. But the big surprise here is that they have $883 million in cash, and they only trade for just about $400 million market cap. So they have twice the cash that their market cap is. They make 100% of their revenues from China. Seeing what it could be worth based on cash flows, let's run a DCF. This is one of the riskier plays. They have very low business predictability. It's a Chinese equity, so there are some obvious risks here. But looking at it and pricing in very low amounts of growth for the next 10 years, we have a huge margin of safety and basically a 10x potential. And the company is basically priced at a major discount compared to their earnings per share, with negative 37% annual for the next 10 years priced in for a rough fair value of what they're at today. Based on free cash flow, similar story. In the last 3 years, they've averaged 95% growth. I don't necessarily think they're going to be doing that for the next 10 years, but even if you price in 5% for the next 10 years, there's roughly a 3x for fair value on free cash flow basis. And again, there's negative 11% for the next 10 years priced in for free cash flow. So obviously there's a huge margin of safety both for the valuation based on earnings per share and free cash flow. Of course, there's major risks, including that it's in China, it's a Chinese equity. We don't necessarily have access to all of their fundamental data, and we can't verify some of these things. So it's definitely not something I'm going to be going all in on, but nonetheless, the valuation says it has a potential to 10x. It's very interesting to me, especially considering that their market cap is half the price of their cash on hand. If it was accurate and there was no fraud, then they have twice the cash that their market cap is. So there's more value than their current market cap is how I'm understanding that. And they're trading for just about 1.5 times what they earn, which is very cheap. So very interesting story here. Again, definitely somewhat of a gamble if you were to take place in this. But this is one of those stocks that filtering through 10,000 stocks will result in showing you something very interesting that you might not expect to see. This is one of 4 or 5 that I might want to show you guys in the near future. So if you're not already subscribed to the channel, leave a like if you enjoyed the video. Comment down below if you're going to be taking a deeper look into this stock, and I'll see you guys next time.